All right, welcome everybody. So we wanted to first express the importance of multiple time frames in trading. For those that are new and have not seen any significance in it or just have not been informed properly, hopping on a single chart and just plugging away indicators is an extremely dangerous risk at hand when other professional players are looking at key levels in the same product, okay, that you're trading. So do not pass up the importance of multiple time frames for the market you are trading. These days, with technology being available at a push and click of a mouse button, we can find amazing indicators and resources coded by other trading professionals to be able to identify key levels, for trading intraday or even swing trading the market that you're trading. Okay, so I wanted to introduce you to some major key levels you want to look for today and from this day forward that you may be able to find easily and install on your charting platforms. Okay, this indicator is called the in parentheses you'll see it a lot of times OHLC, open high low close. Let me show you what it might look like, something like this over here. OHLC, open high low close. Now in this specific indicator, I'll actually go through this details of this a little bit here. I'll break this down in a bit. Okay, simply as said, this indicator is available. It'll plot prior daily, weekly, and monthly open, high, low, and close lines. Now, what's cool about this is traditionally, support resistance, and the way I've learned from my mentors, you do it manually from high time frames, and you come down into smaller time frames, and it's kind of like what we call maybe like a Google view. You're getting that bird's eye view, and then you're coming down deep down into the forest, my mentor would say. Okay, and so you don't want to start just like trading, a 2-minute chart or a 5-minute chart, and not looking at outside of the forest and not knowing what's going on in the grand scheme of things. And so if you don't put in all the work to do a proper analysis of higher time frame down, one of the shortcuts you can use is the weekly, monthly, and daily open, high, low, close, and close will stand for like settle price and such like that. This is what the close is better known for, is settle price. Again, using the indicator, you don't have to use as much mental work and stuff, and then avoid having certain lines being redistributed in the wrong places. You're going to be more exact on where most other professionals are looking. Okay, you may sometime skew support and resistance, a little different or a few points off from where others are looking, especially with data being slightly different on each platform. So in this example on my Tradingview charts, I'm going to show you an indicator. This is all the indicators on Tradingview are built on a thing called PineScript. Other trading platforms will have them built on their own coding languages, which is not too important for you as a trader. If you're not a coder, you don't need to know that. But Tradingview uses PineScripts, and they plot a lot of really cool, neat tools. You can get pretty much for free through the public libraries and such. Okay, so this was an indicator that I did find in the public library. I'll share that link with you before this video is over. But anyway, I have removed all of the other tools that I use on my chart. This is the micro ES that we're looking at in this example. It's the micro S&P 500 futures market. Basically, we won't get into the details today about how the product trades and what the product's about. We'll look simply at this indicator tool. Okay, so see here on my 30-minute chart how when the price hit the prior monthly, this little thing here, the prior monthly high 38.6250, we had a swift rejection there, and price went back up. Okay, so it basically was rejected. Maybe perhaps we can say that people that bought here from the big money from the prior month, when it made this high, this became an area that they defended. Okay, so you'll hear people use that terminology, that they defended a price, they defended an area, since this price was here. So, and then furthermore, you can see that in the attempt to get down from there, from the prior day's low of 38.90, this was the prior day from Friday's trading session, the low that it hit, it did take some significant work before it broke down. It made 1, 2, 3, 4, 5, I mean, almost maybe 6, you would say, but 4 pretty tough attempts before it finally broke down at about 1 in the morning Central Time, right around London session, and sold off and sold aggressively also through the weekly low, the prior weekly low that did not even at all attempt to, it was like nothing, right? So that happens sometimes. But you see how this area was completely identified as some support, finally broke down, broke past the weekly into that high of that month of 38.62.50. And the cool thing, this indicator also labels the price. And now we can see that also here in this example where price went up, and you know, you can call it a zone. It's not going to hit to the tick, but you know, a couple of times here it tried to come up, and now this area here, which was at one point a potential you know, support, is now kind of reflecting and showing it's a resistance. Okay, this weekly low of 38.50, 38.80.50. It broke through some massive momentum into the monthly highs, has now become a support, a resistance wall, ceiling here for now, at least. Now this is pre-market, 10 minutes before the U.S. Cash open outcry opens. Well, we've seen here plenty of attempts by traders to work this, and some people probably fading these areas, you know, range traders and stuff like that. So using these tools can help you identify support resistance areas. Again, better known to professional traders as key areas, key levels, they'd call it. Okay. Now, there's many other ways to identify support and resistance also. You know, if you're a day trader, for example, there's opening ranges, initial balances. There's even dynamic support resistances called VWAP. VWAP, known very popular to day traders as a volume weighted average price. So, however, we just wanted to stay topic specific today for you, introduce you to this tool that you should definitely consider in your trader's toolbox. Again, you can find it. Let me get you the link. You can find this link, and I'll put the link for this video down under this video. If you have Tradingview, okay. Otherwise, you can just go through your other platforms, and you could build them out. Like on NinjaTrader, I had to go to the ecosystem, and I had to pick a daily, which is actually built in a Ninja, but then I had to go to the ecosystem and get a weekly made by a third party, OHLC, and then also look for the prior monthly. And it's okay. In some platforms, you got to work with what you got. And this one being free, this gentleman, which I gave him credit already, even on Twitter, has this awesome open source here and free indicator you can use that's going to be able to do that all for you in one indicator. You'll be able to plot your hourly, daily, weekly, monthly. Now, I don't use the hourly. I use something else in the daytime called an initial balance. So I have mine checked off, and let me show you what that looks like. Okay, here. So even though it's checked off here, you'll see all the different time frames, the hourlies, the high-low close for previous day, the open of the day, which I have that always on, and then your previous week high-low close, week opens, then the monthly high-low close and open. Okay, now I also have my labels on, and then in inputs, I just have my show hourlies disconnected. I don't want to look at that because, again, when I come into my day trading session, I'll in a further video show you guys talk about initial balance. So it's important to have these for me. And then I keep my label sizes at normal. You can blow these things up. You make them large, depending on your eyesight and stuff like that, where your preference is. You make them tiny, whatever. You can automate them, it looks like. But I have them on normal, which is just about, it's good enough for me. You know, and then just save it and have that, you know, on your workspace. But it's a great free tool. And I mean, you know, again, I mean, we can see time and time again these areas being very highly defended, respected, and such like that. And you can use it in your intraday trading, or you're in swing trading. You know, so because we have here available weeklies and monthlies, you could. My thing is using them in daily, so works out pretty good because I can see key areas like this one that just happened. You know, at 2:30 Central. Obvious, I was not up for it, but it was a clean support with, you know, a good on the, ES, if this is micro ES, but if this is ES, 10-point move. And that's what most pros go for. They'll go for that 10-point swing, $50 on micro, but hell, you can, scale this up as you go. 10 points on the E-mini ES is 10 times its value. It's $500 per contract. You get good at doing this, with one contract on a micro, you scale it up and you can get over to doing minis one day, or you can do, 3 lots of micros, depending on whatever your risk parameter and your budget is. That's another topic. So just wanted to introduce this, how very viable it is in any type of market, any kind of trading that could be charted. Definitely consider that. I've given you guys the link, and hope you have a good trading week. Bye.